You differ from, I'd say, most of the street, including what Bob just said, is on inflation, which Bob thinks is tame. What's your view there?
Well, our view is that wage inflation and labor cost went up. And remember last Friday, although we were very excited about the headline and we're very excited about the participation rate going up, then it's very important to note that we're still seeing a fairly strong uptrend in wages. We're now seeing wage growth at the highest level since the recession. So in that sense, this is important for the Fed. It's important generally for the market that the labor costs continue to creep higher, and we got to keep an eye on this.
You've been warning about rising inflation for a long time, and even the Fed, Torsten, is not with you. Powell, just on Friday, called inflation muted.
I know, so there's a very big difference between output price inflation, meaning consumer price inflation, and cost inflation, which is wage inflation. So you're right, we've been talking about this for a while, but it has also been happening and slowly going up for a while. But it still continues to be very important across all sectors that you talk about here all the time. There's labor shortages in retail, in healthcare, transportation, even home building. All those anecdotes tell us something very important, that you can't just discard that and say, oh, the Fed should just look at markets. They shouldn't really look at what's going on in the underlying economy.
How many hikes do you think they're going to do this year? You think they're going to surprise on the upside?
So we do still think that they will have 2 hikes in the summer and in December. So I think that's very important because it's very critical. The labor market is going very gangbuster here. So I know ISM was weak, but as Bob was talking about, the trade issue is incredibly critical for the outlook. So that's why the reason why the market is relatively positive here is probably a lot to do with that they are now meetings. At least they're doing something. At least they're trying to hash out some deal. We'll see how far it gets.
But Torsten, 3.2%. Isn't that what we're talking about? The wage growth on Friday?
Which is the highest level since the recession.
I know, but we've got a roaring economy going, and we're still only 3.2%. I mean, that's hardly ringing alarm bells. Even Powell did not seem to be overtly concerned about it that much.
And commodity prices are coming down pretty much across the board.
All understood. But why is he so worried about what's going on in markets? Why is he not working about the dual mandate? The dual mandate says they should worry about inflation and wages.
Because it's not that simple.
Expectations have fallen, though.
Fully understood, but I mean, should we just ignore that wages are going up?
It's not that simple. The answer is because Powell is learning what Yellen had to learn, which is, yes, you have a dual mandate, but in fact, your message to the markets and to the people in the United States has to be a lot more nuanced than that. And I thought his comments reflected a growing maturity for him, for Powell.
So true, it is a lot more complicated for them because if they just ignore the market, of course, they begin to drag down the outlook. But it's a very difficult balance here that there's a lot of focus on the market and much less focus on this issue of what labor costs are.
More broadly, Torsten, the idea that, I mean, the market has rushed to a point where they really do think that perhaps there's a stall coming in the U.S. economy or something like that. I mean, do you see a mismatch between how the markets have become set up and the growth picture, setting aside inflation?
Absolutely. The consensus does not see a recession. I mean, equities are certainly pricing a recession.
But does the consensus ever see a recession when we're going into a recession?
That's true, but generally over the last 10 years, the consensus has at least been at least the academic literature would tell you that the best predictor of what will happen in the future is the consensus both on earnings for the individual companies, also at the macro picture. So in fairness, it's true that the consensus has not been good at capturing turning points. But that being said, it's still very difficult to see when you look at the anecdotal evidence, when you look at the actual data, any signs of a recession just around the corner.
Why aren't we getting more wage inflation? 3.2% is amazing to me with a roaring economy.
Because we're able to
demand for jobs. What's keeping it down?
Those who are outside the labor market, despite the opioid crisis, despite many people on disability insurance, a lot of people are actually coming back and taking jobs. There's a lot of anecdotal evidence, both in the transportation sector, elsewhere in retail, that workers are coming back and taking jobs, and that's holding wage growth down. So the good news, if you will, is that the labor market still is able to drag people back in to get jobs. So in that sense, that's a very important reason why wages are not going up more.